Welcome back. You're watching To The Point. How credible is the arithmetic the budget is based upon, and how comforting are the reforms it's promised? Those are the two key issues I shall explore today with the Chief Economic Advisor to the Government, Arvind Subramanian. Dr. Subramanian, let's start with some critical questions to do with the arithmetic the budget is based upon. It hinges upon the presumption that GDP will grow somewhere between 8.1 and 8.5%. But at a time when many people are questioning whether GDP actually grew by 7.4% last year because indicators like corporate profits, tax collection, job growth and exports suggest otherwise, there's a lot of skepticism whether you can suddenly achieve over 8.1 or 8.2% growth. Would you accept that this skepticism has some foundation?
Well, actually not really. I'll tell you why. You see, the budget is based on projections about nominal GDP growth. That is the sum of real GDP growth and inflation, right? Before the numbers came out, we were expecting nominal GDP growth of about 11.5%. Broadly, that was about 6.5% on GDP growth and about 4.5% on inflation. What has happened when the new numbers have come out, and by the way, we have to work with the new numbers because we know the numbers, the real GDP growth number has gone up, but the inflation number has actually come down. So it turns out that the relevant number to use for tax revenues and tax revenue projections is the same as before. So there's no, so in that sense, for the revenue projections, the new statistical numbers don't make any difference.
Except for the fact that I well remember what you said the day the new GDP numbers came out. You said, I'm puzzled by them. Then the day you launched the economic survey, you cautioned people about those numbers. Your actual phrase was, India's is a recovering, not a surging economy.
Right.
Now, if suddenly next year it were to grow at over 8%, it would have dramatically become a surging economy. Can that sharp, marked change from a recovering economy to a surging economy actually happen so quickly?
No, the thing is that I still stand by the fact that the 8.5%, that number should be viewed as India as a recovering, not a surging economy. But all I'm trying to say is, so that I'm clear on, because as you said earlier, the 8.5 number, it's directionally okay, because remember, directionally from 13-14 to 14-15, we saw some increase in growth, consistent with everything else we know. And what we're projecting is that that increase in growth will continue. But whether that adds up to 8.5% or 6.5%, that's the open question.
Absolutely. And given the figures that have emerged last night and are in the papers today of your core sector growth of just 1.8%, which is the lowest for 13 months or maybe even 14, suddenly to believe that we're going to end up with a year where we have somewhere between 8.1 and 8.5 looks a little difficult to accept.
No, again, remember that the 8.1 to 8.5 is difficult to accept in what it connotes. What 8.5 connotes is a booming economy, right?
Absolutely.
Yeah. But it's not. And we're not a booming economy. We're a recovering economy. But the point is that our revenue projection in the budget do not hinge on 8.5 connoting a booming economy. We factored that into account.
In fact, that was the second set of figures that I was going to bring up, which have actually created a degree of skepticism. Your revenue projection for this year is a growth of 15.8% compared to 9.9 the year before. And if you don't achieve over 8 on the GDP, then clearly you're not going to make your tax targets, which means your fiscal deficit will be under strain, or you're going to have to savagely cut expenditure in a year when planned expenditure is already less than what it was last year. So isn't there a series of problems that emerge because that 8 to 8.5% figure for GDP has a certain question mark around it?
So there are two distinct points here. One is whether the 8.5% is real or statistical.
Absolutely.
Right? And what I'm trying to say is that it's more a statistical, not the real number for the projections. And the second point, which is a very important point that you raise, is are our assumptions for any given growth rate, how much tax revenues we expect to get? It's called buoyancy. Have you erred on the side of optimism on that? Because last year indeed we had, enormously so. But what I can assure you is that this year we have made no facts about how tax revenues are going to respond, because essentially it's very clear. What we're assuming is, because this year compared to last year, there are 3 major tax changes, increases, which is what is projected to give.
What are those? Because those give credibility to your 15.8% tax rise.
Exactly. And those 3 are: 1, the excise taxes on diesel and petroleum, which are going to fetch on an annual basis 70,000 crores. 1. 2, this cess on coal, which is going to fetch about 6,500, 7,000, and the service excise tax increase going up, which is about, I think, about 11, 12,000 crores. So this is real money as opposed to funny money.
And this is not dependent on the economy growing at over 8%.
Exactly. It doesn't depend on that.
To what extent is your excise from petrol and diesel and other oil products dependent upon the oil price staying low?
Yeah, remember, these are specific taxes. So they're not. If the tax were related to value, then the world price and GDP would matter. But here, it's a fixed amount, rupee amount.
So no matter what happens to the oil prices, this will give you the revenue projected.
Exactly.
So your 15.8% growth of tax is something you're very confident about.
Yeah. Even the coal cess is again based on, it's 100 more rupees per ton of coal.
So to sum up, you're very confident of your 15.8% rise in tax revenues, but you accept that the GDP projection of growth over 8% at the moment is more statistical than real.
Absolutely. And so compared to last year, there's much greater credibility to the revenue projections than there was last year.
Now, your fiscal deficit, of course, is the difference between your tax revenues and your expenditure. And as Maisari Bhasnurmad wrote in the Economic Times yesterday, you're projecting a growth in tax revenue of 6% over last year. That you're confident of, as you explained.
Yeah.
But she says on the other side, you're also assuming a decline of over 2% in expenditure.
Yeah.
Are you sure you'll be able to ensure that decline? Usually there's pressure to spend,
but
particularly when your planned expenditure is less than the year before.
You see, remember that the problem in India has always been that towards the end of the year, you end up cutting a lot of expenditure, much more than you've budgeted for. So the problem in India is not that you can't cut expenditure, but that you end up cutting late and a lot.
But the reason you cut late and you cut a lot is to meet your fiscal deficit target.
Exactly.
Because it turns out by that stage to be unrealistic. Now, I'm coming to that in a moment's time.
Yeah.
But what I suggest before I come to that is that you're already anticipating a need to have to cut expenditure to ensure it doesn't grow to the extent it could.
Yeah.
And therefore, if you have a problem with the fisc, then the cutting of expenditure will be even more so.
Yeah. No, but here, see, remember a few things that there are 3 or 4 sources of the cuts in expenditure, right? What has happened? One is because you've transferred a lot of or some of the spending to the states now. After the 14th Finance Commission devolution, last year the transfers to the states was going to be about 2.1 lakh crores. This year it's going to be 2.6 lakh crores. This year it's going to be around 2 lakh crores, and that's just upfront. You've transferred schemes. You're going to contribute less schemes, so that's completely credible. That's one. Second, your subsidy bill is going to be lower than this year because the price of oil has come down.
Assuming it stays low right through the year, which is probably a safe assumption, but it's not guaranteed.
Remember that last year, the first 2 quarters, oil prices were very, very high. So next year, the assumption that oil prices are going to be lower than last year, even if oil prices go up a little bit, it will still remain.
Okay.
So no problem with that.
And the third?
Yeah. So we're cutting. So these are all credible cuts, and you put it all together. You mean so the subsidy bill, the revenue bill, the transfers to the states, that account for a bulk, and in fact on capital expenditures we're going up. So it's a completely credible system of cuts and increases in expenditure that hopefully this time, because the revenue estimates are more reasonable, you won't have to do this late and a lot cutting at the end of the year.
I hear what you're saying.
Yeah.
I'm prepared to accept it. But when the world found out about the fact that you're increasing your fiscal deficit target from 3.6 to 3.9 and you're postponing the final target of 3 by a whole year, the ratings agencies, from their initial announcements, are actually deeply skeptical. They think that, in fact, the basis upon which you're doing this is not healthy and it's not credible. They, therefore, aren't taking as seriously what you've just said as explanation as you'd like them to.
Yeah. So let me say a few things. First of all, it's very important to note that we're not raising the deficit. We're cutting it, but not cutting it by as much as they want.
Which to them looks as if it's a raise in terms of the target.
Yeah. So remember, there's a great saying when the economist's wife turns to the economist and says, "Honey, do you love me?" And he says, "Relative to what?" So this is a case of relative to what, And then we can have a big discussion on whether, it should be 3.6 or 3.9. But here are three very important points that I would like to tell the world and the rating agencies. One, you cannot question this government's commitment to fiscal discipline because 4.1 this year was achieved under very difficult circumstances.
Quite right. You cut off over 1 lakh crore
rupees. So the way I want to tell, what I want to tell the world is that the commitment to discipline, fiscal discipline, has been demonstrated, and there's also a discipline to commitment. So both are there. One. Second, that the reason to not cut 3.6 is completely explicable due to four factors. One, macroeconomic pressures have abated. When they called for a zero, to go to 3.6, inflation was 12%, current account deficit was 4.5%. We're in a different world. We don't need to cut so much. One. Two, you accept the point that we're a recovering economy. In a recovering economy, nobody in the world asks you to cut even more because that's, aggravates the problem. Point number two. Point number three, everyone accepts that we do need to ratchet up public expenditure. So therefore, the need to go to 3.6 has kind of almost disappeared. And on top of that, we've had the 14th Finance Commission recommendations, which has reduced the fiscal envelope. So both the need to cut savagely, which is what they want, has gone, and the ability to do so, even if we believe that, has diminished.
So to sum up what you're saying, you're suggesting to me that even though the initial responses from Moody's, from CRISIL, from S&P is somewhat negative, when they think about it carefully and then bear in mind what you've just said, they'll say, actually, this was perhaps an acceptable thing. They may differ on just how wise it was, but they're not going to react adversely.
They should not. And let me add one last very important point that nobody has appreciated, that we have actually given more money to the states because of the 14th Finance Commission, and they have been more prudent than the center, so that if you add up the national government and the states, our fiscal deficit is actually going to be much more than what is suggested by looking at the central government
Except
alone.
that one of the things that the agencies are already indicating is that, in fact, any possibility of an upgrade, one or two of them were toying with the idea of upgrade, that is postponed by a whole year. You may not be downgraded, but you've forsaken an upgrade.
But I would argue that that's based on somewhat limited thinking, because what I've explained to you should make them change their mind.
One other thing. You're reasonably convincing when you argue that the impact of the increase in the target for the fiscal deficit is not going to have an adverse response from the agencies, and therefore, hopefully, it won't put off investor confidence, it won't affect FDI. Suppose on top of this situation, your land acquisition amendment ordinance stumbles, or you're forced to make fairly important dilutions, as the government's allies are absolutely insisting it will have to do. In that circumstance, we'll be sending a very negative message on top of the question marks, at least, that have arisen from the arithmetic we're discussing. Then aren't you worried there could be a cumulative impact on investor confidence, on possibly FDI, perhaps on your GDP projections, perhaps on your fiscal deficit assumptions?
So there, my response is very simple, that, what this government is doing, some of it is the budget arithmetic we just spoke about. Over and above that, there is a slew of reforms that's either being done or being contemplated. There's the GST bill, there's the coal auctions, there's the FDI in insurance, there's the mineral bill, and there's the land acquisition.
FDI insurance could be stuck in Parliament.
So the point I'm making is that one has to see how this whole package turns out at the end of the session.
Okay, I accept that. A lot of the response, if your land acquisition stumbles, if there are question marks about the arithmetic of the budget, if there are concerns about the fiscal deficit, a lot of that response will be tempered by what happens on the reform front. So let's come to the reforms, because that's the second part of what I want to discuss with you. There is an argument that several of the reforms that are in the budget are a bit like a post-dated check. You're making announcements of what you want to do, but the actual delivery will happen several years down the road. In some cases, there's not even a deadline for when it will happen. Now, post-dated checks are an article of faith. You're asking people to accept you'll deliver. It's the promise they're getting today. The delivery still has question marks.
Well, we can talk about the specific ones you have in mind. For example, the tax one, the corporate tax reform is one that, originally could have been done earlier, but because of the squeezed envelope.
Why wasn't it done earlier? Because Mr. Jaitley's explanation when asked in an interview was that he didn't want to spring a surprise on industry. But this is the sort of surprise industrialists love. They welcome.
No, you see, and see, there are two reasons. One is what he said. This is actually a nice line due to Vijay Kelkar, that never spring markets with bad news. Remember, this is a package of good news and bad news. I mean, bad news I mean in the sense of politically, not economically, because this is about reducing rates, which industry will love,
and abolishing exemptions,
which I may not like.
But you're not doing it at one go. You're doing it over a staggered 4-year period.
Yeah.
And what I'm saying is, why not start the process now rather than next year, so that they get the benefit of the lower 1% tax, and certainly side by side they get used to losing some exemptions.
Yeah, but remember, but because you're going to, say people had planned to come in thinking that this year the exemption thing was going to be untouched, we would have sprung a surprise on them. So that's why you need to give notice on that.
The question is this. Are you really as solicitous of the concerns of industry, which is why you didn't spring a surprise, as you call it, or was Mr. Jaitley put off by the Delhi election results and suddenly said, this might give me a pro-rich image just when I've lost the popular vote in the capital and can't afford it? And so did he stagger it for a political rather than an economic reason?
Yeah. So first, remember, the surprise point is valid one. The second is, you have to remember this year, the fiscal envelope was shrunk considerably because of the 14th Finance Committee recommendation.
So he couldn't afford it.
Exactly. So he couldn't afford it.
So that's not what he said. Now you're revealing something new. He wasn't just concerned about springing a surprise on industry. You're admitting he couldn't afford to start the reduction in corporate tax this year. He needed a year more at least.
No, and both are completely valid. I think it's not one or the other.
Except that he didn't mention one, you mentioned it.
No, but I think it's all a package. The point is that, you don't want to surprise, and you want to, because remember, there's a third reason for this, that next year the fiscal envelope will be better because the GST will be introduced.
In other words, what I can't afford this year, I can afford next year. But your third reason reinforces the second. And the second was the one he didn't mention, but I'm glad you're mentioning it, because I think, in all honesty, you're revealing as an advisor what perhaps a politician sometimes can't reveal in public, which is, I needed an extra year myself, even though I'm going to claim I took the extra year because I wanted to protect them from a surprise.
No, but I think you are making it, actually twisting it, Karan. Both are completely valid. Okay. You don't want to surprise, and you may not have had enough of the envelope.
You may well be right. Let's then come to a second promised reform that, at least prima facie, looks a bit like a post-dated check. It's what you've promised to do in terms of ease of business. Now, the government is going to set up an expert committee to prepare a draft legislation to replace multiple permissions with a regulatory mechanism. First of all, that process could take a whole year to complete. Secondly, this government came to power knowing that ease of business was a substantial obstacle. It should have therefore done this a year earlier, or at least 9 months earlier. And the situation today is, A, you're acting 9 months later than you should have, and B, what you're proposing could take up to a year more to happen. So once again, this is an enticing promise, but delivery will be possibly a whole year away.
Yeah, but see, on that, ease of doing business is a whole bunch of things. It has to do with liberalizing FDI, it has to do with trying to do land law, it has to do with FDI and insurance, and it has to do with the whole tax regime as well, getting rid of the adversarial tax regime.
So you need that time?
No. And all that has been acted upon. So it's one in a series of things that you're doing. So, and the government can rightly claim that it's been doing a lot of things to do these in terms of all the actions taken so far. And remember, what all the world misunderstands is the ease of doing business. Changing that is not a switch that you switch on and off, or a lever that you pull. That is what I say in the economic survey is exactly what Max Weber said is the slow boring of hard boards. You have to chip away, and that takes a long time.
Which is why I say to you that the process that you're talking about, which involves a committee, which involves draft legislation, which involves getting it passed, which involves probably parliamentary select committees and delaying tactics by the opposition, which you're very used to, means that the chipping away at Max Weber's hardboard could carry on for a year or more before you actually achieve this switch to a regulatory mechanism and away from multiple permissions?
No, I think because you're chipping away all the time and have been, it's the effect is a cumulative effect. So if you do A plus B plus C, you're going to reap some rewards. You do A plus B plus C plus D, you'll reap more rewards. So it's a cumulative, continuous process.
All right, let's accept that argument as well. Let's then come to a third area where, in fact, this time it's not just a post-dated check. One could arguably say the check has bounced. Last year, in his budget speech of July, Mr. Jaitley said that he was going to set up a committee under Bimal Jalan to advise the government on how to cut subsidies. And in subsequent interviews, including one to me, he gave assurances that we would see real subsidy cuts this February. Now, the Bimal Jalan committee submitted its interim report some 6 or 7 weeks ago, but there have been no substantive real cuts in subsidy. You have reduced the oil subsidy, but that's entirely because the oil prices come down. Fertilizer subsidy and food subsidy have gone up by just under 10,000 crore. And people say, why is he reneged on this commitment?
Reneged on which commitment?
To cut subsidies in terms of food, to cut subsidies in terms of fertilizer. Both of those have gone up by nearly 10,000 crore compared to last year.
See, the answer is quite simple, that the aim here is to try and cut leakages and to try and make sure that these subsidies are better targeted. I think no one has ever claimed that subsidies were going to be drastically cut, except for diesel and
his
petrol.
exact words last year, forgive me interrupting, was, I propose to overhaul the subsidy regime. And then he went on to specifically mention food subsidies as well as a new urea policy. Food subsidies have not been touched.
So what the aim is, in the economic survey, if you've read it, there's something called the JAM Trinity, the Jan Dhan Aadhar Mobile Trinity, that number Trinity, which is going to be the real way that you can sustainably cut, rationalize subsidies going forward.
I accept that, but I'm told...
It's begun with the LPG.
But you're not giving yourself any benefit of better targeting through JAM in this budget at all, from what I can tell.
No, if in the case of the cooking gas, in fact, already the evidence shows that in those districts where this has been introduced, there have been, slower growth in consumption than other districts.
But in the case of food, in the case of fertilizer?
So because in that, the technology to, remember, the LPG, there was the technology already because the oil companies had the bank accounts and the names. So we need to extend that technology to the other.
How long will it take you before this trinity of JAM actually produces, through better targeting, an actual reduction in subsidies in food and fertilizer? How much time do you need? I take it it's not going to happen in 15, 16. Is this something that will start happening 16, 17?
No, I think, you see, remember, the states have already been asked to start working on computerizing the PDS roles. So it's going to be a continuous cumulative process.
But can it show results in 15, 16?
That is in the states that make progress, yes.
But there's a big if here.
I mean, depending upon how fast they move on the JAM Trinity.
This is out of your hands as a ministry. It's now in the hands of the states and how quickly they deliver.
To some extent, yeah.
All right. Let's come to another area where people feel, in fact, Mr. Jaitley is silent and they're a bit perplexed. And I'm talking about labour law reforms, which practically everyone agrees, including Mr. Jaitley's allies like Naresh Gujral, that without labour law reforms, Make in India will never be a reality. Now, Vasundhara Raje Scindia in Rajasthan has moved. Mr. Modi has written letters to chief ministers asking them to emulate what Miss Scindia has done. And yet I'm surprised that Mr. Jaitley didn't have a strong message of commitment to labour law reform in his budget. It would have been a message that would have invigorated animal spirits. It would have been a message which would have reassured investors that this reform is coming. But he's completely silent on it.
Yeah, actually, 2 points. One, he's not been silent, but the
where was he speaking?
Let me tell you. Let me come to that. But first, it's important to remember that. Remember, this is an area where the states have as much of a say, on labour laws. As you know, both states and the centre do
provided this. The central government okays it.
Yeah, and that signal has been very powerfully sent by facilitating presidential assent for the Rajasthan labour law. So, and remember that this is how the whole concept now is not just cooperative but competitive federalism as well.
Except for the fact that what you're doing is you're saying to the states, this is a hot potato we don't want to touch, you do it. If you're prepared to do it, we'll okay whatever you suggest. But us, the central government, aren't prepared even to talk about it in a vigorous way because somehow it's a political potato that would be worrying for us politically in this country.
So the first point is we do want to further competitive federalism, and getting the presidential assent is a signal that if you do, we will help you there. But that's the first point. The second point is, you said it's been absent in the speech, and that's not the case. In fact, Manish Sabharwal wrote an op-ed yesterday where he highlighted something that could potentially be very important, which is the EPFO and the ESI, the option that could be given to workers on these two schemes. And this is,
that doesn't really add up to meaningful labor law reform of the sort that Vasundhara Raje Scindia has done, and which you're praising, and you're suggesting other states should emulate. What you're suggesting is a much weaker, diluted version of labor law
this
reform.
is, read the piece by Manish Sabharwal. This is actually very important, because essentially the phrase the finance minister used in the budget speech was that these organizations have hostages, not clients. Lots of unclaimed fund, poor returns, and the effective deduction for poor workers is very high. So what this could do is essentially radically change the options that employees have vis-a-vis their savings.
I'm talking of the option that employers have to shut down companies and firms that are clearly not working and be able to get rid of stuff that they can no longer afford. That is an option that Vasundhara Raje Scindia is trying to exercise incrementally. That is a subject that Mr. Jaitley was silent about, and it's his silence that I'm questioning.
But I think the silence should be seen against the context of all the other things that have been done by the centre to facilitate these reforms.
Let me then come to a third area where I'm slightly personally surprised by Mr. Jaitley's silence, and this is to do with steps to recapitalize public sector banks. Last year in July, he said capital will be raised by increasing the shareholding of people in a phased manner through sale of shares. That hasn't happened in the last 9 months. This time the budget doesn't even talk about it. You have an allocation of some 8,000 crore, which is perhaps marginally more than the sum of 7,000 crore utilized last year, but it's clearly inadequate for the purpose. And I put it to you that sustained 8% growth, which is your desire, is not really possible if you don't substantially recapitalize your banks. Otherwise, where's the lending going to come from?
Yeah, but there, Karan, remember that there's money of about close to 8,000 crores, which is being done, in my view, in a very nice way, linking it to performance, so you're kind of differentiating. But second is, it has to be seen in the context of an announced policy that the government is willing to see its holding come down to 52%, which means that any bank can go and raise money now.
Except that 9 months have passed since the policy was announced.
But that's up to the banks to do.
Well, this is very interesting. You're saying that it's now up to the banks to act on last July's policy, and if they haven't acted, in a sense, the onus is theirs for not doing so.
Because the two-pronged attack is government gives money, and in addition, they raise resources. The government is giving money, now they have to raise resources. So I think it's completely consistent. Now, coming back to your point about the 8%, remember the philosophy in this budget, which is something that we spelt out earlier in the mid-year economic analysis, that private investment remains a little bit weak in the country because of the banking challenge and the corporate. That's why public investment is being increased to play the catalytic role in the interim to help achieve the 8.5%.
And I grant there's a very substantial increase in public investment, particularly when you look at the infrastructure area. That is beyond denial. Let me then end by putting this to you. This phrase that I used, that many of the reforms promised in the budget are a bit like a post-dated check. Talk now, but delivery a couple of years later, sometimes without even a data. Are you saying to me that that is an unfair way of looking at it? It's ignoring the fact that some things take time, and that time has to be given. It's also ignoring the fact that politics has a momentum of its own, and you simply can't deliver overnight, even if industrialists would rather have it that way.
So I think I think it is a slightly if I may say misguided characterization, because I think what you have to see, the economic survey says this whole Big Bang reforms was always a totally unrealistic and unfair standard to apply to a country that's A, not in crisis, and that's B, a vibrant, frustratingly vibrant democracy with many, many veto centers and things.
Mr. Jaitley's budget proved you correct.
No, and what therefore the standard is this super tanker of the Indian economy, has this been pushed along in the right directions and been accelerated? By that standard, I would argue that that has been met.
And you would say that not just affirmatively, but unequivocally as well?
Yeah, in terms of the, maintaining and accelerating the momentum, yes, I would say that unequivocally.
Arvind Subramanian, a pleasure talking to you.
Thanks, Karan.